Axiata Group is apparently looking to sell its 28.5% stake in Singapore telco firm M1. One of M1's shareholders, Singapore Press Holdings, issued a statement to the SGX today. It said that SPH, Axiata and another stakeholder, Keppel Telecommunications and Transportation, are currently undertaking a strategic review in respect of their respective shareholdings in M1. They have jointly appointed Morgan Stanley Asia Singapore as their financial advisor to assist with the strategic review. Keppel and SPH together hold 32% stake. The combined stake of the three shareholders is worth more than 3.6 billion ringgit. M1 is Singapore's smallest telco. In FY16, its net profit dropped 16% to 150 million Sing dollars, mainly due to lower international call and roaming revenues. Over the last 12 months, its stocks has declined by about 21%. 3 more people have reportedly been acquitted of cheating charges in a case linked to the PKFZ project. They are former Kuala Dimensi project manager Lau Jen Dong, architect Bernard Tan Swee Seng, and Kuala Dimensi COO Stephen Abok. The judge ruled that the prosecution failed to show prima facie and ordered all 3 to be freed. This means no one else is on trial for the scandal, and that could potentially cost taxpayers 12 billion ringgit. All others previously charged, former Minister Ling Leong Sik and Chan Kong Choi, as well as former Port Klang Authority Chairman O.C. P'ng, walked free from court as well. To recap, the project was mooted by then Transport Minister Ling Leong Sik back in 1997, with an estimated cost of 1.1 billion ringgit. By 2007, that figure had ballooned to 4.5 billion ringgit. Following allegations of corruption, Ong Tee Kiat, who had by then assumed the Transport Ministry portfolio, ordered an audit of PKFZ's books. The audit concluded that total costs would swell even bigger to 12.5 billion ringgit after factoring in interest payments. The Association of Banks in Malaysia says the approval rate for housing loans last year stood at 73.8%. In a statement, it said the approval rate takes into account housing loans approved by banks and accepted by borrowers, and those that were approved by banks but cancelled by borrowers. However, incomplete applications were excluded in calculating the statistics. This comes after Reda's statement last week claiming that up to 60% of housing loans were rejected by banks, which it blamed as the root cause of the current sluggish property sales. Acknowledging the difference, ABM said this may be due to differing statistical approaches used by each industry. According to Bank Negara's latest quarterly bulletin, as of Q4 of 2016, the banking system had disbursed 85.3 billion ringgit worth of loans for households to buy residential properties. ABM noted that as with other loans, one of the key factors that banks will consider is the applicant's capability to repay the loan. Others include the location of the property and the applicant's credit rating. Gamuda and Teleworks may see some upside if the Selangor water deal between Putrajaya and the state government is settled. The Edge Financial Daily reported yesterday that the Selangor administration may fork out as much as 40% of the price tag for Splash. CIMB Investment Bank says if that deal materializes, Gamuda shareholders may get special dividends. The quantum, however, would depend on the final price tag and whether or not there's a haircut to the book value. Teleworks, meanwhile, should see enhancement to its cash flow on potential recovery of receivables from Splash, even as it retains its recurring income from operations and maintenance in the state. Besides that, another possible direct beneficiary of the cash proceeds is Kumpulan Perangsang Selangor, which holds a 30% stake in Splash. This development is good news for the long drawn-out takeover of Splash. While the quantum of the potential tariff hike will be a political issue, from the standpoint of the Selangor government, it is crucial for it to recover its capex from the acquisition and keep the water distribution operations post-restructuring. Tanjong Motors Holdings is reportedly going big in Myanmar by ramping up its dealership network by 2020. The group currently runs 3 Nissan dealerships in Yangon and other parts of Myanmar. Citing a company official who oversees operations in the country, Nikkei Asian Review reports that Tanjong wants to up the numbers of dealerships to 15, which means setting up 2 dealerships each year throughout Myanmar. The group is said to be aiming for more than 20% of the new car market in Southeast Asia. Tan Chong has been selling Nissan cars in Myanmar since 2013. It also started assembling the Sunny model at the local plant last year. An assembly plant in central Myanmar city of Bago is also in the pipeline.